Hello and welcome to Startup Street. I'm Arundhati Ramlin and with me is Aishwarya Anand. These are the top headlines from the startup world. Flipkart is cutting down spends across new experiments, capex and mergers and acquisitions, said the Walmart-owned company CEO Kalyan Krishnamurthy. Speaking at the India Internet Day event, he also said that the pandemic-led digital shift has been overestimated.
Space tech startup Skyroot Aerospace raises $51 million in its Series B funding round, led by Singapore Sovereign Wealth Fund GIC. This is the largest ever round in the emerging Indian space tech sector.
MobiKwik registers a strong top-line growth of 80%, clocking revenues to the tune of 540 crore rupees in FY22. The digital payments provider, which has delayed its IPO, also claims to have turned EBITDA positive in the previous fiscal on the back of lower cash burn.
Tiger Global bagged Innovasa lays off 120 employees, according to reports. The downsizing comes less than a year after the health tech unicorn doubled its valuations to $3.3 billion in a $150 million funding round.
Industry body NRAI issues an advisory to all its member restaurants asking them to exercise caution before signing up for new discount programs launched by Zomato and Swiggy. It could lead to unsustainable discounts coupled with a wedge between the restaurant and its customer, reads the advisory. Those were the headlines that we're tracking for you this evening on What's Brewing Today. Two-wheeler lifecycle services and finance specialist Bazaar has raised 170 crore rupees in equity funding as a part of its Series D funding round, taking the total 250 crore rupees in this round. The Pune-based company secured the funding from a consortium led by Women's World Banking Asset Management. The company, which is present across 140 Indian cities with over 1,000 touchpoints, has financed over 1 lakh of two-wheelers, disbursing over 600 crore rupees in FY22 alone. To talk about the company's growth strategy and fund allocation plan, we're joined by Karunakaran Vadakkepat, co-founder and joint MD of Bazaar. Thank you so much for joining us on the show. But before we get to the fundraise, take us through the various kinds of products that you have available. Are you looking at any new offerings?
Thanks for having me. See, we pride ourselves to be the only two-wheeler life cycle services company, which means that we aspire to be across the life cycle of a two-wheeler. So currently our products are, we are into used two-wheeler financing, we are into new two-wheeler financing, but basically in the rural areas with our unique product called the direct collection model. We have a separate vertical focused on electric two-wheelers, which, as all of us agree, is going to be the next big thing in the two-wheeler space.
Absolutely.
And we are into the marketplace also, where currently we are into buying and selling of two-wheelers, which is a highly unorganized market now, and we hope to disrupt the market. Over a period of time, we plan to get into multi-brand two-wheeler servicing also, but at least that's 2 years away. As far as new products are concerned in the EV space, right, other than the traditional vanilla retail finance, we would like to launch innovative products like rentals, leasing, and things like that.
Absolutely.
This is the product offering we have and our immediate plans for new products.
Right. So looking at new products in the EV space, but let's get to the fundraising as well. You've raised 170 crore rupees in equity. So how do you plan to use the funds? What's the fund allocation plan?
So as of now, while we will allocate the funds across all verticals, we have not decided how much fund to allocate to which product. But having said that, most of this or a major part of this funding will go into technology. Because I think especially in the marketplace business and in the EV business, technology is going to be a very, very big game changer. So, like we said earlier, we are looking to raise separate funds for the EV business also. So we will be deploying funds across. And one more thing, like I said, since we are to be a life cycle services company, we would like to have a seamless offering to the customer to buy all these products which a customer wants in the two-wheeler space. So we will spend a lot of money in technology and also across these 4 products.
Right. So a big chunk of that going towards technology. Now, like you said, you provide a range of affordable solutions along the two-wheeler life cycle. Now, this includes accessible and affordable financing for new two-wheelers and pre-owned two-wheelers as well. So take us through the kind of growth you've seen for this business and how much have you disbursed in terms of loans so far?
So overall, we have disbursed more than 1,500 crores so far.
Okay.
Year before last, we disbursed 325 crores. Last year, we doubled it to 600 plus crores. But for COVID, no, we would have crossed 800 crores. This year, we expect to cross disbursement of around 1,000 crores. And next year, 2,500 crores. In the next 5 years, we want to disburse, this I am saying annual disbursement.
Right.
Around 7,000 crores in the next 4 or 5 years, and have a asset under management of approximately 6,500 crores.
Right.
So we are virtually doubling our disbursement year on year.
All right. And speaking of disbursals, what are the kind of NPAs you're seeing currently?
So we pride ourselves that we have one of the best or one of the least NPAs, gross NPAs in the two-wheeler business. Our worst period was during the COVID period when it crossed 6%. But today, as on today, where we stand, we are sub 4%, which I personally believe is the best in the industry.
Right. So one of the best in the industry. Now, apart from financing, you're also, like you said, buying and selling two-wheelers. So what's the traction you're seeing for this business and on that platform, and how will you use the funds to scale this?
So this is a very difficult business. Unlike, see, for example, when you go and buy a new two-wheeler, you know exactly what is the asset price, you know exactly what is the quality of the asset, and you don't have to worry about paper transfer. But in this business, all the three issues are a concern for the customer. For example, he doesn't know what is the exact price he should pay for the vehicle because this business is done by a set of unorganized channels.
Right.
So between two channels, you will have a difference in price. You are not sure about the quality, and paper transfer is also a challenge. So today we have 15 stores across UP and Kerala where we are piloting this business. We are seeing good traction from the customer because he gets trust and transparency when he buys from our shop as compared to buy from a small channel. But having said that, no, we will slowly grow this business because we have to learn a lot in this business because of the challenges I mentioned above.
Right.
So while we will next year also we will grow slowly, but after 1.5 to 2 years, I think we will be ready to scale rapidly in this business.
So you'll scale rapidly in 1.5 to 2 years. But take us through your current revenues across all platforms. Where do you plan to end this year? What's the revenue mix been like between your various offerings, and what will be your top focus area?
So today, if you see our revenue mix, around 22% come from the pre-owned two-wheelers, around 68% from the rural new two-wheeler business, and 10% from what we call the urban two-wheeler business, which is basically the Ford Metros. So see, actually, we are focusing only on the rural areas now for the used two-wheeler business, and so the urban business will slowly come down. So over a period of time, I think, for example, next year, I think around 32% will be used two-wheeler finance, and balance will be new two-wheeler finance in the rural area.
All right. All right.
And our current asset under management is 650 crores. We expect to exit this year at around 700 crores. And even the asset under management, we want to double it in every financial year. That's what we are aiming at.
All right, Mr. Karunakaran, thank you so much for joining us on the show, and we wish you all the best going forward.
Thank you. Thanks for having me. Thank you very much.
Moving on, D2C brands have been able to cater to consumers across the country due to digital-first proposition. From delivering fresh milk to daily essentials, Country Delight is carving out more space in the kitchen. But can the natural foods brand continue to delight its consumers? On the sidelines of Thai Delhi NCR's India Internet Day, I caught up with Chakradhar Gade, co-founder of Country Delight, and I began by asking that in 2013, when online delivery was not in vogue, what gave him the confidence to start doorstep delivery of milk at the click of a button? Listen in to what he had to say.
So we actually started Country Delight back in 2013 to start with, and during the initial days, the idea was always to build a captive customer-based business model.
Correct.
Milk is a very commoditized market where, brands find it very difficult to differentiate, even if they give, reasonable quality. And there were a number of supply chain issues that we had to solve. So the way we went about was to solve the customer problem of giving good quality product, which we saw would happen if the product is delivered directly to the doorstep of the customer. So the whole genesis and thought process around Country Delight has been around acquiring customers, captive customers with one good hook, and then building a cross-sell economy of the products around Country Delight.
Now, could you also take us through the kind of technology you have deployed, and also take us through your business model, and how do you how do you connect with the dairy farmers? What is the network like?
So we are a full stack business model. We have sourcing, we have processing, we have last mile. These are the three legs in our business. We take milk from the farmer, check for quality on every sample of milk that is taken on a real-time basis, then transfer it through supply chain to our own processing facilities. Most of our processing facilities are operating with the philosophy of minimal processing. Then it goes to our distribution locations from where it goes to the customers. So this entire life cycle is built on real-time monitoring of the business and ability to consistently give products at scale. Currently in our business, we have roughly 16-17 different users with different use cases and applications using the in-house tech that we've built to give fresh products every day to the customer.
Now, Chakradhar, another question that I want to ask you is, could you quickly tell us that how many orders do you fulfill in a month, and how many households are you actually catering to at the moment, and give us a sense of what's your customer base like?
So currently we are doing more than 8 million deliveries a month, roughly 8.5 million deliveries a month. We are catering to nearly 370 to 400,000 regular subscribers. We keep adding subscribers over and above this. Just to give you a sense, our business has been growing 2 to 2.5 times a year in the last 4 to 5 years, and maybe 5 years back we were starting with a 5,000-7,000 subscriber base, and that's how we've grown to where we are today. We're present in 16 cities. We have supply chains in 11 states across the country. We have gone beyond milk into the entire natural food essential space. So our thesis is to give high quality natural products directly to the doorsteps of the customer every morning to their homes.
All right. Another thing that I want to ask you is that you're also planning to expand into rice, wheat, grains. They're already, which is basically the grocery segment, right? So now we already have players like Big Basket, Swiggy, Instamart. How do you plan to cement your foothold in the grocery segment?
Our go-to market has always been with a brand as the core of reaching the customer. So Country Delight is basically built around the philosophy of building full stack categories and fundamentally better quality natural products. So if you take any of the staples, whether it is, let's say for example, pulses as a category, most of the pulses that you consume today are fumigated with sulfur. The pulses that Country Delight are natural, unpolished and near organic pulses. If you take oils, most of the oils that people consume today are chemically processed. There is solvent extraction, chemical solvent extraction that is happening in the oils. All Country Delight oils that we are planning to launch are cold pressed oils. So we don't launch a product if there is no differentiation in terms of quality, whether it is through traceability or through supply chain or through minimal processing. One of these aspects usually plays a big differentiator, and fundamentally we promise our customers better quality products.
Correct. Now, could you take us through some of, how has your organic and inorganic growth been, and what are the IPO plans for the company?
So we have primarily grown organically. We've not looked at any inorganic opportunities of growth. Most of the categories that we've built in with a customer first approach, and we will continue to do so. We will probably look for an IPO in about 2 to 3 years.
Now, milk procurement prices have been rising due to, prompting higher revenues for dairy companies, but also leading to a lot of pressure on margins for FY23 and 24. How do you think this is going to be impacting your business?
So we have been predicting inflation for a while, and we have built preemptive tools within the business, whether it is tying up with farmers in advance or in terms of managing the pricing from a customer point of view as a business. So while we have seen some margin pressure. Now we are in the phase where things are easing out and we see that margins will revert to where they were in 6-8 months from now.
On that note, it is time for us to head into a short break. But coming up next, funding for startups in the month of August remains slow. Will the funding winter continue or will we see a pickup? We find out on the other side.